Now, job openings fell more than expected to 8.7 million on the last day of October. Now, this comes ahead of course, the big jobs report on Friday. We have our very own Jared Blikre here to break down the information and, of course, the market impact. Hey, Jared.
Hey, Rochelle. I'll give you spoiler alert. There was not much market impact. However, the big news, I think, is that the direction is still down in terms of new openings, and also the revisions are down. We were looking at a revised number of 9.35 million, and then we are 8.7 million, so a drop of about, 500,000 in the space of that 1 month period. And this is 2 months ago, so we're only looking at October's numbers. And of course, this Friday, we're going to get the November payroll numbers. And then a month later, we'll get the November JOLTS report. But let's stick with this for a second. If you look at the number of job openings for each person who's looking at work, that's a key ratio. That was at 2% at the very top here. That was over the pandemic, 2021. Everybody was quitting and getting better paying jobs. Well, that is down to 1.3 right now. And that's pretty close to the long-term average of 1.2. That was 2019, so that was before the pandemic. So the labor market has definitely cooled. And another indication is the quits rate. You can see that's down to 2.3% from the peak up here. And people are just not feeling as able to quit their jobs and perhaps get another job that pays better. Just digging inside the report, I think it was interesting to note that the declines we're seeing mainly in healthcare and social assistance. Those were down 236,000. Finance and insurance, real estate rentals and leasing. And for all the talk about tech layoffs, tech field actually increased 39,000. So maybe all that hubbub about the Magnificent Seven is warranted. But let's take a look at the market impact. I was watching the tape at 10 a.m. when the news dropped. There is the Dow. You can see barely a movement in there. Let's see the NASDAQ real quick. Not too much more. We actually did get a little bit of a rise in the NASDAQ, so some contrary motions there, maybe because the tech sphere is so good that they are hiring more. If we take a look at the S&P 500, kind of a combination of the two, but you can see at least the S&P 500 is in the green right now.
And of course, when you have a data-dependent Fed, every little bit matters. But former Fed economist Claudia Sam recently said that these surveys that they gather information for JOLTS, inflation, home prices, may not be getting the full picture as response rates for the Bureau of Labor Statistics are tumbling. So does that change how we weigh this data?
Yeah, if you can't count people accurately, how are you going to produce these statistics? And this is the rate we can see before the pandemic. This goes all the way back to 2014, so 10 years. It was at 60%. It has now dwindled to, it looks like, about 40%, maybe a little bit below that. So this has been an issue for the BLS. And what it does is it makes the reports more erratic, and then it makes the market reaction surrounding these reports more erratic as well. So it kind of feeds in and of itself. Now, all these reports that we're talking about from the BLS, these are revised each year, and they are taken to a very high level of accuracy. However, until we get to that point, we can still have a lot of variations. And I think that's where a lot of the stories, especially if you're on Twitter, you see this theme quite a bit. So the numbers that we're looking for Friday, I think we're looking for something like 180,000 payrolls. Don't quote me on that, but that would be up from 150,000. There's still a lot of hope in the jobs market. And rate cuts are getting priced in for next year, in part because of this softening of the labor market. However, I would add, when the labor market softens, and it really softens, that just happens really quickly within the span of a month or two, and it doesn't really give the Federal Reserve time to react. So people that think the Fed is just going to be trimming 25, 50 basis points, no, it would probably be more like 100 or 200 basis points if history is any guide, guys.